rising interest rates and high inflation have an impact on the SAA of institutional investors. The question we want to answer in this particular video is, which alternative asset classes are gaining significance due to the ongoing interest rate turnaround and the elevated inflation? For answering the question, we used our survey data from a total of 165 LPs and GPs to calculate representative indicators for the expected impact on relative attractiveness, strategic importance, and performance. Three asset classes clearly stand out. Hedge funds, liquid alternatives, and commodities are ahead of all other alternative asset classes regarding the expected impact score of sustained inflation and rising interest rates. Overall, investors and asset managers see commodities as the alternative asset class benefiting most from the current environment. The main reason behind this is that commodity prices are a component in calculating inflation rates. Also, commodities are widely considered suitable for diversification, to hedge losses that arise when other asset classes lose out due to inflation. Hedge funds and liquid alternatives are identified as the clear beneficiaries of elevated inflation and rising interest rates as well. In the current volatile environment with high downside risks, but the constantly existing possibility of dynamic market recoveries, long-short strategies are seen to offer good opportunities. As also shown in our BAI investor survey, hedge funds, liquid alternatives and commodities have been subject to decreasing interest from institutional investors in recent years. Current data, on the other hand, of the BAI Investor Survey 2022 may indicate a break in this negative trend, which could lead to their revival. The interviewed experts see a trend following and macro hedge fund strategies advantages in the inflationary environment. But there's a significant variance between different hedge fund strategies and sub-strategies. However, our analysis shows hedge funds, especially trend-following sub-strategies, historically proved useful in times of market downturns and high volatility, which is not necessarily connected to an inflationary environment. But the performance of hedge funds and strategies and sub-strategies showed similar patterns during the two major market downturns of this millennium. It should be noted, however, that since the end of the global financial crisis, the MSCI World has outperformed hedge fund benchmark. But again, only until a renewed market downturn last year due to inflation and rising interest rates. For a more in-depth look, we recommend our newest paper, Interest Rate Turnaround and Inflation. Hedge funds, liquid alternatives and commodities could be profiteers. Investors expect geographical shifts in asset allocation. You can find the link to our newspaper in the video description. And don't forget to check out our YouTube channel. There we upload useful short videos, but also our professional webinars with selected experts.